Thanks everyone for joining us today. We are going to be talking about investing with neutral and how you can invest either online or by calling one of our capital markets associates, Storm or Eric. Eric will be talking a little bit later. He's one of our board members and we'll be talking about alternative investing. He's also a certified financial planner. Just to give you a little background on who we are and what we do, we are a real estate development firm located in Madison, Wisconsin. And we have a project in Milwaukee that's the world's tallest mass timber tower, as you see on the right. And then we have several projects in construction, almost complete in Madison, that we're going to be talking about a little bit further today. And we have plans to expand into Arkansas later this year, into the kind of northwestern Arkansas, Bentonville, Fayetteville market. But really, our main goal is how do we build a differentiated product that focuses on wellness and sustainability? And we'll talk a little bit more about that today. The sustainability side, what we're really focused on is a few certifications, but the two core are FIAS, which stands for Passive House. And how we like to describe that is we put a jacket around our buildings to make it more airtight and efficient. And then Living Building Challenge, which is really a holistic certification that focuses on tenant well-being, holistic wellness and longevity. And then it focuses on also kind of just the overall experience of the building. But we really feel like building with mass timber, which you see that picture here on the right, and having these certifications adds another dimension of niche kind of differentiation for the investment and will definitely provide a little bit additional return because it's something that other tenants, but also other investors don't really see on the market. Just to give you a little background on our founders and a few of our partners, Matt and I co-founded the firm. And Matt comes from a technology background. He sold his company a few years back for $1.2 billion valuation. He invests in each project. And then it was one of my kind of core theses that was really kind of the initial prompt and thesis of the firm of how do we build better multifamily buildings that have more resiliency, better tenant lifestyle, and just an overall better experience for both the residents and the community. And then Daniel is our partner and CPO. He's on the far right of this image. And he used to work for Foster and Partners. He was the lead architect for Apple campus and part of Google's campus expansion. And then he also was the lead architect for the Four Seasons Tower in Philadelphia. So he brings a lot of innovation and leadership to our architecture and development side of the business. And he leads up our architectural studio, which for our smaller projects, we are the architect. For our larger projects, we are just the interior designer. And then he also leads up the development process of going through the entitlements, getting all of our kind of zoning and everything we need to actually build these wonderful buildings. One of our key construction partners is CD Smith. CD Smith is a large Wisconsin contractor. They've built a lot of projects across the state. Probably most notably, they've done several big campus expansions on UW-Madison's campus. They built Northwestern Mutual's campus in Milwaukee. And then they built a recent large mass timber tower in downtown Milwaukee called the Ascent. And they also got done building a large, just kind of conventional tower in downtown Madison called Madison Yards. The image you see here on the right, on the bottom right-hand side, that's Baker's Place. That was one of our first tall projects that they are just wrapping up here in May, doing a fantastic job. And then they will be the GC for the Edison, which we'll talk about here in a second, but there is an investment opportunity in the Edison. Hines is our property manager. Hines has a really big background in property management and development. They have 15,000 units under management right now. So they're kind of institutional quality property management firm located in Chicago, but with their headquarters in Texas. They are managing our whole portfolio for us. They also are managing a few other kind of really, really nice assets in Milwaukee. One of them is 333 North Waters, who some of you might be familiar with if you're calling in from Milwaukee, Wisconsin. Okay, so how does investment work at Neutral? So there's a few investment opportunities right now that we have available. One is Edison, which is going to be the world's tallest mass timber tower, standing at 31 stories. We're just starting construction actually in 2 weeks on that project. We closed a $133 million loan with Bank OZK late in 2024. And there are two opportunities there. One is equity with roughly 16% IRR. The other is debt at a 10% interest rate if you invest less than 250 and 12% if you invest more than 250. The other project we have available on the equity side is 517. 517 is just in kind of the middle of construction right now. We're on the second floor. That one also, we're at around a 16% projected IRR, and same thing on the debt side. And then the other project that we have a very, very small amount of debt left for is Baker's Place, which is 12% interest per annum. And that one accrues until maturity. So just to give you a little background on kind of how we structure our positions, we essentially have three layers. So the first position is the debtors, the senior and the mezz debtors, which you see here on the lower right-hand corner. The second position is our notes. So that's kind of a structured debt position that you have the ability to get into. Slightly less risk, but a little bit less return than the equity side. Those are typically 2 to 4 year terms, and typically we pay out quarterly on those notes at 10 to 12%. The next position is equity. Equity we have in all of our projects, and those are typically 3 to 7 year target hold periods. The holds are somewhat non-definitive because at 5 years for each project, we have a vote of the members, and the vote essentially says we can either stay in if the majority say yes, or we get out if the majority say no. And if we say we want to stay in, then we stay in for another 2 years. And at the end of that 2 years, we have another vote. And if the majority want to sell, we sell. And if the majority want to stay, we stay. And then we keep doing that. There have been some circumstances where there's deaths in the family or there's other big life events that people have to get out of equity. And in those circumstances, Neutral will work with those investors to try to buy them out of their positions or find a third party that would buy them. That's not guaranteed. We just want to be open and honest with you that we're willing to work with you, but it's not a guaranteed buyout at a certain point in time until we sell. Just to give you a little background on our process, we've just launched our V2 of our investor portal, which is our custom software that we built specifically for our investors to really keep the process simple. That's one thing that we've seen in kind of the alternative real estate investing space, that the process is sometimes quite elusive and complicated, and it really doesn't have to be. And so what you can do is you go onto our website, neutral.us, and you click invest with us. That will take you to our portal where you'll be able to see all the deals we currently have open. And then you'll be able to go through a pretty simple 5-step process to invest in the project. We're here to help. Storm is one of the main guys that you would be calling to talk with about how to go through that process, but it is relatively self-explanatory where you can do it pretty much all on your own. Once you invest, then you have access to your own portal. So that's what you see here on the bottom right-hand corner. That's just an image of a portal that we currently have. But basically, this allows you to track all your investments. It allows you to get all your tax documents in tax season for K1s or 1099s. We also provide quarterly updates to our investors. So you'll be able to see everything going on with the project. That's one thing that we know a lot of our investors like is these are physical assets. They're non-financial assets. And so for these assets, people actually want to see what's going on the site. They want to see construction updates. They want to see these beautiful spaces that we're curating. And that's something you'll be able to do in the portal. So we have a blog post there, and then we have a quarterly report. And then if you have any questions, we're always here to help. Storm has a live chat there that he's always answering, or you can always just call us and get any questions answered that you might have. I'm going to let Eric speak for a little bit here, just about kind of an overview on alternative investing from a financial advisor's perspective. Eric is, again, one of our board members, but he's also a certified financial planner and the owner of Central Wealth. And he kind of provides a nice kind of overview of why invest in alternatives and why invest in real estate.
All right. Thanks, Nate. As he indicated, I own Central Wealth Management. It's here located in Madison, Wisconsin. And we manage about $150 million worth of clients' assets and primarily it's more of a boutique offering. And over the last 26 years, as being a certified financial planner, I have to really do my due diligence and be a true fiduciary, which just means do the best interests of the clients at all time. And one of the things that I do is real estate for my clients. And the relationship I have with Neutral, by doing my due diligence over the last 3 years, I've been able to deploy $20 million worth of my capital as well as my investors' capital into their projects. And so being on the board really gives me that extra bit of information that I can do, that I know that my client's money is working for them and it's in a good company and I can trust what Neutral is doing. But the reason why I invest my client's money as well as my own money in real estate is that it's an asset class that, one, it's very difficult to get into if you don't have a good relationship. And what I mean by that, if you want to own your own property, you have to be the manager, you have to hire it, you have to worry about if they're going to trash your house or trash the apartment. So having these projects for my clients, it gives us that allocation to a real estate asset that has no correlation to the stock market. And what I love about that is markets are going to go up and down, but real estate is going to do as well as the area that's in. So that's why I really like the projects that are in Madison and Milwaukee. And non-correlated just means that the markets, like I said, they can go up and down, but real estate is going to be much more stabilized. The other thing that it provides is diversification. It's really important to get diversified in your portfolio. And a lot of clients don't know where they should be invested, and that's up to me. And that's why I do my due diligence and working with Neutral. It can also be a great way to generate income. So there's a couple of properties that allow you to get income on a quarterly basis. And that's great at 10 or 12%. When you look at bonds on a conservative basis, you're going to get about 4% right now. And so adding a little bit more risk, you can actually double or triple the return. And that risk reward is well worth it. Real estate also has some great tax advantages that you can't find in any other asset class. So that's a huge positive for those that want to invest and want to pay less taxes than if you were in the stock market. You have some nice long-term appreciation. Some of these projects are 3 years, some are 5, some are 7. But it's nice because you can kind of pick and choose which investment you want to be. And that's why when I do my due diligence, I have a variety of different offerings. Some clients really like Baker's Place or the Edison, and Nate will go over those projects with you. It's also a great inflation hedge. There's always, there's kind of the buzzword. There's tons of inflation going on. Real estate is a great opportunity to protect your assets against inflation.
Thanks, Eric. Yeah, just on that inflation hedge, that's one thing that we really like about multifamily versus office. And one of the reasons why we've selected multifamily as kind of the niche where we're deploying capital. Because with office, you're signing these long 5, 10, 15-year leases. And typically you're only going up by roughly 3 to 4% per year is kind of the maximum inflation increase you can charge a tenant per the lease. Whereas with multifamily, you're only signing 1-year leases. So every single 12 months, you get a reset for inflation. And if you look at the last 3 years, it's been a lot more than 3 to 4%. And so it's a great way in multifamily to hedge the current environment by really being able to flex with your different rental rates for multifamily on a 12-month basis to reflect the current market conditions. Okay, I'm going to talk a little bit about Baker's Place, which is our second deal. Our first deal we did out in Monona, which is a suburb of Madison, and we sold that deal. We entitled it and sold it to a family office who's currently doing the construction. This is our second deal, which has been under construction for a little less than 2 years now. We'll be finishing in May. But as you can see here, the site is 8 blocks away from the Wisconsin State Capitol, which is right here. I'll circle that for those who maybe don't see it. But that is 8 blocks away down East Wash, which is kind of this new up and coming corridor. You have Google right on the same block as us that I'm circling here in green. Then you have American Families, big office building, which is a large insurance company. You have Fetch, which is a big new technology firm. and then several other key employers all on this corridor. So it's a really great corridor for multifamily, as there's a lot of new businesses and large businesses that have moved into Madison, and their employees need a spot to live. So we're opening that May 1st. So far, we're starting pre-leasing, and we have 10 pre-leases signed, with a lot more coming in. So there's been a lot of really great demand. This is the building here. If you're looking at it from the side street, which is called Patterson, there's a cafe here on the corner, right hand side, and then there's townhomes all along the corridor going down Patterson Street. Just to give you a little background of our project details, it's a 14-story tower, 206 units. We have 110 parking stalls on site, and then we have a lot more parking stalls right behind us in the city ramp. This deal, we also capitalized on the debt side with Banco ZK and Promark. Banco ZK is the senior, Promark is the mezzanine. And then we have a group of investors on the equity side that have all invested anywhere between 25 and $500,000 in the project. The variety of units, as you can see on the right, beautiful mass timber exposed ceiling, very high class kind of luxury asset. We have studios all the way up to townhomes and then penthouse. The penthouse are absolutely beautiful. If anyone on the call wants to tour, we're happy to walk you through the building. This is one of our amenity spaces. We designed this beautiful chandelier right in the middle of the space. These are all custom made Bochi lights that kind of fall down in this nice artistic way. One of the things that we're kind of deploying across our whole portfolio is a big focus on wellness and longevity. And so we have a health clinic with a doctor on site. We have a full-time personal training staff and nutritionists, and we have a big kind of fitness facility, gym, and hot cold therapy room. And the idea is that people living in this building are focused on sustainability, but they're also focused just on personal growth. And we believe that with that, there needs to be a really holistic approach to wellness and longevity. And so when someone signs their lease, they also get a free diagnostic to our fitness facility, which includes a full mobility analysis, a full DEXA scan, which shows you your body composition, a VO2 max, RMR, resting metabolic rate, and then a full blood panel with our doctor. And from there, you get kind of your initial diagnostic that says, here's our recommendations for you of what to improve in your kind of holistic wellness journey. And then there's a few tiers. You can sign up for weekly or quarterly or yearly seeings of the doctor. You can sign up for one-on-one personal training. You can sign up for virtual personal training, or as complimentary as part of your lease, you can just be a part of the program and use the gym, go to the hot cold therapy studio, and really look at this more of a holistic wellness journey and living journey instead of having it be kind of this commodity asset where we see a lot of the multifamily space, where most of the buildings that are going up in the Midwest are kind of just boxes where people live in, and there's no community, there's no really improvement to their lifestyle. And what we're trying to curate with our buildings is a real improvement to someone's lifestyle, an ability for them to do a lot of their daily necessities in one building and not have to go to all these different places to work out and have your ice bath and your sauna. Everything's really encompassed in one. Then the other thing we do is we partner with Vitruvian Farms, which is a large local regenerative organic farmer. They deliver to our garden room twice a week, fresh fruits and vegetables. And then we also have a nice cafe on site, and it's a company out of LA that's actually coming in, and they're building this really beautiful cafe for someone to go down and grab a cup of coffee and hang out with friends. So what does the return summary look like? Again, we have no equity on this. We just have debt. So 12% simple interest, 12 months with a potential 12-month extension. We only have a little bit amount left. So if you're interested, please contact Storm. Next project is 517 West Main Street. This one is on the other side of the Capitol. So if you're familiar with Madison, East Wash is east of the Capitol. This is west of the Capitol. We're 5 blocks down from the Capitol Square. Great location, lovely neighborhood in the Bassett neighborhood. And we bought these 2 old homes that you see here, and we tore them down recently and we're building a 4-story, 33 unit multifamily complex. And the idea with these projects is they're kind of urban infill projects, really focused on kind of this missing middle, which is a big buzzword lately. But what the missing middle is really these beautiful neighborhoods in like Chicago, New York, where you see these wonderful brownstones, really have been non-existent. They haven't been developed for over the last 50 years. Everything that's been developed is these huge 500 unit multifamily 4-story garden style projects that aren't great for living and they're terrible for the neighborhoods. And so our approach is really, how can we have the building respond to the neighborhood? How can it be vernacular and really have a great living experience for those tenants living inside? And we have the same kind of methodology. We have exposed mass timber throughout the whole space. We have really nice kind of custom interior design. We also have a cafe here on ground floor. And then all these tenants actually have access to our wellness and longevity program at our larger building on the other side of the Capitol. So they're still getting the amenities of a larger building, but they're able to live in kind of this nice, tranquil, small urban neighborhood. As far as the stats of the project, it's 4 stories, 33 units. We have 19 parking stalls on site. The reason why we have that ratio is we're relatively close to UW-Madison campus, and we have a good amount of smaller units that will likely be occupied by graduate students or potentially undergrads. And they typically don't have any parking. So we didn't want to overpark the project since some of it is student housing. This is some of the interiors of one of our 1 bedrooms. And then this is a few of our rents. So we have studios, 1 beds, 2 beds. We don't have any 3 beds, just given the fact that it's so close to campus. We didn't really see a demand for larger units like we have in some of our other projects. The return summary for this, if you're investing in equity, is 17% for A units and 18% for C units. The difference between the 2 units is the A units is less than 500,000, and they do have a waterfall. The C units do not have a waterfall, and it's over 500,000. What is a waterfall? A waterfall is essentially where us, the sponsor, get a little bit piece of revenue after we hit a certain return. So once we return capital to you and give you a 10% preferred return, then if you're in the A unit pool, you'll share 75-25, 75 to you, 25% to us on everything after that 10% preferred return. If you invest more than 500,000, we waive that fee altogether and you're getting straight project level returns. So it's about 1%, might be a little bit higher if we do really, really well. And that's the increase, but that's what you get as kind of a reward for investing more than 500,000. Promissory notes, again, similar structure. We have 12% notes if you invest more than 500,000. Those interest payments are paid quarterly. The hold period is 24 plus 12-month extension. If you invest less than 500,000, it's 24 months at 10% with a 12-month extension, and interest is paid quarterly. I'm going to quickly go through this. We're happy to share this deck with you afterwards if you're interested, but just for the sake of brevity and time, we want to be quick here since we know it's over your lunch break. One thing just to mention, though, is that we in Madison have really great occupancy. So typically for a healthy market, we like to see kind of right around that 95% range. For Madison, we're at 97.8, and it's projected to grow to 98.5 per the Concord Group, who's our market study analysis group, in 2027. So this is wonderful because for all of our underwriting, we underwrite at 5% vacancy. So if we get up to 98.5, that really, really helps our returns. The reason why that is we're seeing a huge deficiency in housing. You see that bottom number there of 2,749 units that were deficient in the city of Madison. So that means that we have underhoused the whole city. So we're really bullish on the city of Madison, and we think we can keep building here for a long time. And the supply demand metrics will stay very, very consistent and advantageous for the investors. All right, so Neutral Edison. This is our big project that we're raising a good amount of capital for. And again, we're just starting construction here in about 2 weeks. But the project is located right downtown Milwaukee. If you're familiar with the kind of renewed and revamped Deer District, we're right across the river. You see that pedestrian bridge that walks you right into the Deer District is right here, if you can see my screen. And then you have Pfizer, which is where the Bucks play, right across the river from us. So really great location for food and beverage and entertainment for our tenants living here. And it's also a wonderful building. Again, we use Banco ZK as our senior and Promark as our mezz. This is our project that will be Living Building Challenge certified, which will be the tallest LBC building in the world. It'll also be FIA certified, which is passive house certification. So a lot of records on this one. The project is located right downtown Milwaukee. So if you are familiar again with Performing Arts Center, the Marcus Performing Arts Center, or Pfizer, we're kind of right in the square middle. We're 2 blocks away from the core downtown business district with BMO Tower, Wells Fargo, JP Morgan Chase. A lot of the core business activities are right around City Hall. And then it has a lot of walkability. So you're able to walk to food and beverage. You're able to go to a wonderful arts and theater right across the street from us, or a nice game at the Buck Stadium. It's 31 stories, 378 units. We're right on the river. So a part of the project is we're redoing a portion of the Riverwalk where we have retail, where we currently have a co-working space and a restaurant on the first floor. That will be both open to the tenants and open to the public. And then in this area on the 7th floor, we're actually instituting a large fitness facility. So part of our whole wellness and longevity program, we're kind of taking to the next level. And we have 8,000 square feet of fitness and then 2,000 square feet of a clinic for the tenants to use and to be used by the public. What do the rental rates look like? They're right here on the right. We have studios all the way up to 3-bed penthouse. Most of the stack are smaller. The reason why we did that is based on the market study that we got from the Concorde Group. The market is slightly over absorbed with kind of the larger 3-bed and large 2-beds, but it has a lot of room in the studios, alcoves, and 1-beds. So that's why we've heavily kind of vested on the 1-beds, alcoves, and studios. And we feel like that is the right decision to make to lease up the project very, very quickly. This is the 7th floor amenity. So this is where we have our whole wellness and clinical space. But the same thing we have on Baker's Place that I mentioned before, we'll have here. This will just be kind of to the next level since it's a much larger space. And then on the first floor, we have co-working available for the tenants as part of the complimentary part of their lease. And then we also have a open kind of farm to table restaurant that we're implementing as well. I'll quickly go through this. Again, we'll share this with you if you want to see it afterwards. But same thing as Madison, Milwaukee is trending towards a very, very great occupancy rate of 97.2%. We won't open this building until June of 2027. So if you see on this chart on the right, it's more in that kind of 2027, 2028 range that you should be looking. Again, we've underwritten 95%. So if we're at 97.2, we'll be outperforming our underwriting. And then the other thing we like to look at for these bigger metros is what is the renter population in the submarket? And for our submarket of downtown Milwaukee, it's 79% renters. So that means out of 100 people, 79 of them are renting an apartment. So there's a lot of density of renters in downtown Milwaukee, which is not always to be said for some of these bigger cities. The other thing that we really like about Milwaukee and why we're so bullish on Milwaukee is because there's all this kind of coalition of new businesses that are relocating their business downtown to Milwaukee. And some of them have been in the Milwaukee area or in the region for a long time, but they're bringing their campuses back downtown. And the catalyst of this was Northwestern Mutual with their big campus expansion. They have about 5,000 employees in their current campus, but they're expanding right now. And at the end of 2026, they're bringing another 2,000 employees with a 750 employee expansion from there down to downtown Milwaukee. So that's almost 3,000 employees that will be relocating to Milwaukee, which could be potential tenants of ours. in 2027. The other big one to mention here is Pfizer just is opening this spring their 1,000 employee campus just across the river down the street from us. So there's a lot of growth in downtown Milwaukee that we're really, really excited about that we think is going to be really valuable for this project. This is just a few of our competitive set. We're kind of lower on the tier of average rent per unit. You'll see us there at 31.98. Ascent is one of the higher watermarks. 333 is the highest at 3,800. The other thing to note is all of our rents include utilities. And so a lot of our competitors, their published rent is not actually the full cost of the tenant because it doesn't include utilities. So typically you have to add about $150 to $200 a month for utilities, whereas ours, that's included. The reason why we do that is because we're building these buildings so efficiently, so airtightly, that we believe that we're actually going to have a huge cost savings on energy expense. And so instead of passing that cost savings over to the tenant, we have that cost savings built into our rent. And so we're charging a little bit more rent than we typically would, but it includes utilities. So it's less than the overall market still. And it's a great way for us to create kind of this arbitrage of utility expense. So just a return summary here. Again, A units, 17%, less than 25,000. For this project and most of our projects, the C unit threshold is 2 million. On 517, we went a little bit lower just because the project is smaller. But if you're at the $2 million threshold, then you're at a 20% IRR with a 2.49x multiple over 5 years. The big thing to mention here, which Eric talked a little bit about, is the tax advantages. So not all of our projects get all these credits, but a good amount of them do. One thing we're able to tap into is a lot of the inflation reduction tax credits, which I've had some investor ask us, is this going away now with the new administration? And the answer is, I don't know, but likely not. The reason being is that it would have to be passed by all three branches of government, and it would likely upset a lot of people. So we're 99% sure we're going to get this tax credit. But what it's for is geothermal. So the whole system that we have for cooling the building is actually using the river water to be able to circulate and cool the pipes to cool the building. And because of this, we get 30% of the geothermal cost back as a tax credit upon opening. So that's 1.5 million. Another one's for energy efficiency, which has been around for a long time, even before the Inflation Reduction Act. Same thing with the 179D tax deduction. And then we do a cost segregation on every project. So basically what that means is we break out all the constituent elements of the project into minor parts. We analyze them to see what's the useful life per the IRS. And then we depreciate those on a somewhere between 5 and 15 year schedule. And BDO, our accountant, does that for us. So what does this mean for you as an investor? It means that $100,000 equity investment in the Edison would amount to about $4,915, so roughly 5%, as a credit back to you in 2027. And then a $100,000 investment would mean about $62,000 back to you as deductions and depreciation. So that's a really, really big tax incentive, especially if you're trying to do some tax management. That's something to talk with your advisor about or your accountant, because this is a really great incentive of investing in real estate above and beyond the kind of alpha return that we're producing. We have a note option here as well. If you do more than 250, 12% paid quarterly. If you do less than 250, it's 10% paid quarterly. The term of the note is 4 years. I really want to thank everyone for joining us today. And if you have any questions that you want to just email us directly or you want to call us, please feel free to reach out to Storm, who's our private capital director, and he will be happy to answer any questions that you might have. But we appreciate you looking into investing with us, and we look forward to talking to you soon.